Hello and welcome to the Day Tradestor. If you're in the stock markets, you are having a good day. This morning we opened at an all-time high, $6,619.62. We're currently roughly $10 lower than our open, but we've got a green candle going up. If you're not in the markets, you might want to consider opening an account and depositing some funds in that account and then purchasing some stocks, because it's quite likely we may be at the beginning of a new bull run that might last for several years. I mean, here is a 3-month chart. So in 3 months, we've gone from 59.43 at a low to 66.19. And that is a big gain in the last 3 months. If you're not in the markets and you're afraid of getting into the markets because you don't know how to trade, or you're intimidated, or you have a reasonable fear of getting into the markets, that's why I make these videos. I make videos of my trades every day that I use in a swing trading strategy. All the trades that I make, either sell or buys, are recorded, and I explain my process on why I sold them or bought them. And hopefully, if you're watching my videos and you're not in the markets, you may consider getting into the markets, because I'm showing you how my simple strategy is profitable. Now, with the markets going up, we don't really have a great deal of stocks we have to sell. We only had 2 stocks that made today's list from our alerts that we actually quite possibly are going to sell. And then we have several others that we'll take a look at that our price is already too low, or the current price is already lower than our purchase price. And we have quite a few stocks that are still on the list from last week, so we'll take a look at. So the first one we're going to take a look at is Berkshire Hathaway, which is BERK-B. If you don't know much about the markets, you probably know the name Warren Buffett. Warren Buffett, considered the greatest trader of all time. He founded Berkshire Hathaway, I believe, in 1965, I think. And since then, Berkshire Hathaway has dominated the markets since they've been founded, with an annual growth rate of a little over 20% compared to the annual average growth rate of the S&P 500 at 10%. In portfolio growth numbers, what that means, with whatever monies you have in your portfolio balance will double at a 10% interest rate annual on average every 7 years. But whatever your portfolio balance is, if you're in Berkshire Hathaway, your balance will double in roughly 3.5 years. It is a huge difference from 10% to a 20% annual growth rates. If you're in the markets, you're thinking about getting into the markets, you've heard a lot of people say, if you get into the markets, just buy an index, the S&P 500 index, and you'll be great. But if you do a little bit of research, you'll find that if you just buy Berkshire Hathaway, you'll be twice as great. I'm not recommending that you just purchase Berkshire Hathaway. You have to do your own research and make your own decisions. Well, let's go ahead and take a look at Berkshire Hathaway. We currently own 3 shares. We had price cross below our slow-moving average 3 days ago. However, we did not have continuation of that. When the next day we had price move all the way back up. But since then, on Friday and today, we've got price moving down. Our price is currently back below our slow-moving average. Now, looking at my chart, I should have sold a share back here when we had price move across the fast-moving average, and then we had continuation the following day. Somehow I missed that. So we should have sold a stock, and we would have sold that at a profit. So we're going to go ahead and sell on this particular cross. We're going to count this as a continuation of a continuation of the continuation of this cross here, because when I am looking for sell alerts, I have 2 distinct triggers. One is when price moves below our fast moving average and we have continuation the next day, and then the other one is when we have price move below our slow moving average, and if we have price continuation the next day, we'll sell. It's got to be continuation in the movement of the trend, or the movement of the move, or the movement of the cross. So we are going to sell, since I missed this opportunity to sell this particular stock back here on this cross for whatever reason. We're going to sell 1 share. When I maxed out, I like to have 4 shares. So we're looking to sell 1 at $490.22. And I bought Berkshire Hathaway at $485.20. So that's roughly a $5 profit on the sale of that stock. Now, Now today we have a cross of our price moving below our slow moving average. Tomorrow when we look, if we have a price lower than the close of this candle, we'll go ahead and sell. Now hopefully the price won't move $5 and we'll be able to sell that stock at a profit. All right, the next stock that we might be able to sell at a profit is Roku, R-O-K-U. And here we go. You could see I was able to sell a stock here on this day of continuation of price moving below our fast moving average. Now we do have price move below our slow moving average, and we have continuation of that move right now. I currently have 4 shares of Roku, with 2 of them already in a limit order, sell limit order. And that's from a day trading purchase that I made, but price moved against me and went the opposite direction. And any stock that I'm day trading, if price moves against me, I don't sell it. I will hold on to it until price moves back up and captures that. It's basically the same strategy that I use in my swing trading strategy for these videos. But right now we have 4 shares. Now with Roku, I max out at 8 shares. And when I have half the shares remaining, I do not sell anything until we actually have the fast moving average cross below our slow moving average. And what I mean by that is when whatever balance of stocks I have, however many I sell before price moves below, before the fast moving average moves below the slow moving average, I try to sell only half, and I try to wait until we actually have a confirmed price going in a long downward trend. And the reason I do that, because this might just be a fake out. It might just come down for another, this might be the last day it's moved down before it turns back around. A lot of times the moving averages can act as a point in which price will bounce off of. You can see a situation in which a couple times we had price move down and crossed over both the fast moving and the slow moving average, but it returned back up, and then we went back up, and then price moved below the fast moving average, but the next day we went back up, and then it crossed again, and we went back up. This necessarily, because we've got 1, 2, 3, 4, 5 days downward, doesn't necessarily mean that it's going to continue down. It's possible people might be selling, taking profits before the CPI report comes out this week. Excuse me, not the CPI report. It's the Fed report on whether they are going to drop interest rates. So this could just be a move preparing for that drop. So when they do drop, people will buy right back in at a low point. Typically, when interest rates are reduced, the stock market, on average, typically moves upward from that point. And they will be releasing that report on Wednesday at 2 o'clock. So again, not the CPI, it's the Fed rate reduction meeting. All right, with that, so we're not doing anything with Roku. We're going to wait and see what happens to price action, and we'll probably get a better determination on Wednesday. So we'll go ahead and take a look at a few stocks, and we'll place some sell orders now. And the first one we're going to take a look at is BSX, and that's Boston Scientific, so BSX. And here we had price move really fast, and they're going down. Probably due in large part to Donald Trump and RFK. They're trying to revamp the pharmaceutical industry in relation to drugs, vaccines. They're trying to bring in what they believe is going to make things, make the companies a little bit more responsible. And he's trying to make drug companies accountable for deaths or other injuries due to the variety of drugs that are manufactured and put out on the markets. And Boston Scientific is within the pharmaceutical industries. And their connection to pharmaceuticals is they manufacture medical equipment and devices. So they're not directly related to pharmaceuticals. They're on the periphery, but still it is in the medical community. So if drug companies and drug manufacturers are hit, they would be buying less products that would be used in their production of their goods. At any rate, we have our fast moving average crossed yesterday, or excuse me, on Friday, below our slow moving average. And at any point when we have a confirmed move of the price moving across our slow moving average, we want to try to sell everything. However, our purchase price for all of our shares of BSX was $107.59. We're roughly $7 lower than that right now. So we're looking to place a sell order for all 8 shares. We're going to come into our watch list, right click, hit sell. We're looking to sell all 8 shares. And I bought those at $100. So our first digit is in the hundreds place. We take 10% of that, which is 10 cents, and we add that to our purchase price. So for BSX, our now sell order is now $107.69. Good till cancel, extended hours. We have all 8 shares, and that is our first sell order, and that's for Boston Scientific, 8 shares. Next stock we're going to take a look at is Delta Airlines, DAL. All right, we currently have 9 shares. That's 3 books, 3 shares each. We currently have 6 already in sell orders. We have price moved, or actually our fast-moving average price moved below our slow-moving average price on Friday, and we have a continuation of that move down. Last week I had drawn this box, this zone of consolidation, hopefully we would have broken to the upside, but we've broken outside of that zone, now down to the downside. So we're going to remove this drawing. And then we're going to go ahead and set a sell order for the remaining 3 shares that we have. So we're coming over to our watch list, right click, looking to sell 3 shares. And our purchase price for these Delta Airlines shares was $60.22. So we look at the position of our tens place, which is actually 60. 10% of that is 6 cents. So we're going to add 6 cents to $60.22 and make that $60.28. Good till cancel, extended hours. We now have a sell order for all 9 shares that we currently own. If you're watching my video for the first time, we do not sell any shares at a loss. All the stocks that I trade within my swing trading strategy are stocks we plan on holding, quote unquote, long term as investments. But because we trade in and out of these depending on the overall trend, they're actually rarely ever get held as long-term investments. They actually end up being short-term investments. You have to hold on to stocks and equities for a year in order for it to be considered a long-term investment, which changes the tax implications. You pay less tax on long-term holdings. But since we're just holding on to these, we'll collect some dividends in the meantime until price moves back up. Now, typically, I only make recordings of 2 shares or 2 stocks that I actually place sell orders on, but I'll go ahead and do one more today since we don't have a great deal of stocks that we have to either sell or buy today because price is moving up so quickly. So the next one we're going to do is Hilton, HLT. We have price moved below our fast moving average on Friday, and we have a continuation down of that move. And then that move also crossed below our slow moving average. So tomorrow would be a continuation of today's cross. But right now we're concerned with Friday's cross and that continuation. I currently have 3 shares of Hilton. Now I typically max out at 4 shares, and that would be 1 share for each book that I would have. Now I purchased 3 shares at $277.51. So that was back here where I purchased these 3 shares. All of these bubbles, if you're new to the video, these are day trades. Many of my stocks that I own, I just don't swing trade. I also day trade. I do not recommend you day trade. I recommend that you if you're new to trading, that you watch my videos and you learn a process for swing trading. And part of that process is selling both when we have price move below their fast moving average and our slow moving average. So we're going to look to sell 1 share. See if we get it at $272.55. Oh, no, I didn't want to do that. That was supposed to be a sell order. So we're going to go back and buy 1 share. There we go. Not the first time I made that mistake, and it probably won't be the last. I needed to be in the red column and not the green column. But we're going to go ahead and place a sell order for that 1 share of Hilton that I just sold and bought. Right click in our sell. We're looking to sell 1 share. And we bought that, as I said, at $277.51. 10% of the hundreds place is 20 cents. So we're going to add 20 cents and make that 277.71. 277.71 cents. Good till cancel, extended hours. And there's our second sell order for our other share. All right, so there's our 3 stocks that we placed sell orders on. It's now time to take a look at the stocks that we might be able to buy. When we sold Berkshire Hathaway, the current price, we're looking at roughly, we added $490 to our balance. So that is all that I have to spend on any stocks. All of the remaining balance is for my day trades. So we're going to be looking for a stock on our buy list that's $490 or less. Okay, so after looking at my list, I had 6 buy alerts that we received today. I found a stock that we received an alert on today at NRG. We currently have 3 shares. We have a cross that occurred several days ago. However, I probably didn't have enough money on when we were able to possibly purchase this Wednesday or Thursday of last week. Those would be Friday, Thursday, Wednesday of last week. But we are in a strong upward trend for NRG. We have the MACD indicators also in a strong upward trend, and we have the velocity of price is gaining in volume, and we have the RSI about to go through into overbought territory, which is a good signal. Now for NRG, I like to have 12 shares. That's 3 shares for each book. So we're going to purchase 9 shares. So we're going to click 10 on our active trader, subtract 1, and we're in the green column. And we're trying to, we'll see if we can get these at, we'll just try 167.25. We don't have enough purchasing power. Oh, duh, my math was wrong. I only did the math for 3 shares. So my intention was to buy 3 shares. We're just going to buy 3 shares, not 9. I did compute the math for 3 shares. And there we go, 167.24. I'm just running off of automatic processes. I like to max out when we have a fast moving average cross our slow moving average. I did calculate for the 3, but once we got into the actual chart, I just fell back to my automatic process. I also did the math. That leaves me roughly $90. It's actually $86. So we'll take a look at a few more stocks on my list. All right, so I've taken a look at my list from the buy alerts today, the buy alerts last week, and there are no stocks in which I can purchase a full book. So every single stock that I have, I am unable to purchase any more shares that would complete a book. I do not have enough money. So that $80 will just stay in our balance until we're able to buy equities tomorrow or Wednesday. Again, we do not have a lot of money to buy stocks because the market is going up. A lot of the stocks that we have, 3/4 of the stocks that we have are in the S&P 500. So when the S&P 500 is going up, many of those stocks are going up. So it's not a bad thing that we're not selling any stocks. So even though our overall trend is price moving up and we didn't have a lot of stocks to sell today, which didn't give us a great deal of money, so we weren't able to buy anything, even though we are in a green candle, it looks like we're roughly $1.50 less than when we started our video. A lot of experts are expecting the market to take off on Wednesday after 2 o'clock. I don't have a prediction either way. I know statistically after a rate reduction, markets typically on average move up. And that's even if they move down immediately that day or even the next day. They eventually just turn right back around and head up. And with that, we are going to take a look at what we did today. So we bought Berkshire Hathaway for a total of $5 profit. We placed a sell order on Boston Scientific, BSX, Delta Airlines, and Hilton. Now these 3 I did on video. Now off video, we set an order for Royal Caribbean. So if you've been following me and you purchased Royal Caribbean when I did, you may want to consider placing a sell order since price has fallen below our purchase point. And that's if you bought it at the same time or at the same price. Maybe you bought it a day or 2 later. because I've been trying to teach you that swing trades, you do not have to make the purchase or the sale on the very same day that I make the purchase or the sale. If you follow me, you could buy it 1 or 2 or 3 or 4, sometimes 5, 6 days later. The trend, again, we are trying to find trades that move for weeks or months at a time. Now the S&P 500, this chart isn't the best indicator or representation of what each individual stock would do. So let's take a look at Boston Scientific. Oops. I don't have a link, so I need to open this up. All that, why? I need this linked red. Need the red. So when I click on these, it'll show up in the chart. It wasn't showing up if you saw that. I was just clicking and it wasn't happening. So now when I go in, we'll push this back. When I hit, where'd Boston, BSX. We'll move this back up here. And now we're in the BSX chart. So you can see we would have probably purchased here on the 26th and it didn't cross down until the 15th. So that was nearly a month. That was 3 weeks. Here we had a shorter run, but here we probably would have purchased, if we purchased Boston Scientific on this cross, and then that was around August 26th, and that ran until another 3 weeks. So let's take a look at Delta Airlines. So here we have a little bit better representation of what we're trying to capture. We would have bought back here on July 7th, possibly around there, and sold around July 30th, and we would have sold at a profit. So here we possibly, if we bought, we would have bought around August 14th, and we'd be selling right around today or tomorrow. And any stocks that we sold before then, like on this cross, we sold at a profit. And we'll take a look at one more. We'll take a look at Royal Caribbean. Here's 2 examples of a long trend. So even if you choose to follow me and you don't buy on the same day, you can buy them several days later. Both in this run, which was from before July or June 16th to July 31st, so that's a month and a half. And this one was from 8/22 to 9/11, so another 3-week run. So again, if you're following me, you may want to consider placing a sell order if you're able to, or sell it at a profit, Royal Caribbean. And then ultimately we ended up buying 3 shares of NRG stock. And with that, the last thing we're going to take a look at is our actual profits and loss and realized gains for the day and our actual portfolio performance. We'll take a look at that. Sorry about that. All right, so taking a look at our earnings. So far today, I've earned $680.47. If you're new to my videos, most of this is through my day trading strategy. We made $5 when we sold Berkshire Hathaway. And that's what's important. The strategy that I'm trying to show you in this video is a profitable strategy of swing trading, and that would be a $5 profit for today. So my profits are $675 through day trading. Now my portfolio to date, since I opened it on August 20th, actually August 19th, and started trading on August 20th, I'm performing 4.12% compared to the S&P 500 at 2.8%. And you can see that my old account, where I transferred all of the funds and all the cash to the new account, was performing at 16.26 compared to the S&P 500 at 10.54. So when we combine the two, that's a total of 20.38% that I am performing, and my portfolio so far year to date compared to the S&P 500 at 13.34%. So I am performing 7.02% better than the S&P 500, and that's largely through the income creation strategy of day trading. I am improving our portfolio balance every time we sell a stock through our swing trading strategy. And my swing trading strategy is for those people who are new to trading, opening up a retirement account or opening up a trading account, and they don't have a great deal of money. They don't have enough to day trade like I do all day, every day. I am trying to figure out a couple models that give you access, how I can show and report year to date my actual profits from swing trading, and also how to create a possibly a subscription program through Patreon, where your subscriptions would give you access to actually my day trading strategies. Something like where I can possibly refund your subscription on a monthly, bi-monthly 6 monthly. I'm trying to see the legalities of taking a subscription and refunding that to you with additional, it wouldn't technically be interest on top, maybe creating a loan system. This is where I'm making the bulk of my money as for day trading. So let's go ahead and take a look back at the SPX, the SP 500. And we closed at an all-time high. We only closed $3, little more than $3 less than what we actually opened at 66.19. We closed at 66.15, and that is an all-time high for the S&P 500. I hope that I'm informative. I hope that I'm inspiring you to enter the markets, and I hope that I am offering you some good options for stocks to purchase as I show you when my stocks are hitting their either sell triggers or their buy triggers. And before we end the day, if you could please click the like, share, and subscribe button, that'd be amazing. And there's another day notched in our belt. And I hope you all have an amazing rest of your Monday evening.